Please note, this video is for informational purposes only. It is not an offer to sell or a solicitation to buy any securities. On April 7th, Innovation Beverage Group, Nasdaq ticker IBG, released a major operational update that fundamentally shifts the narrative around the company. Following its recent acquisition of a 51% controlling stake in BlockFuel Energy, IBG now effectively operates as an integrated energy producer. The press release confirms that BlockFuel has 15 wells currently producing, with peak production in Q1 reaching approximately 100 barrels of oil equivalent per day. With global oil prices hovering in the high $80s to $90 range, this active production creates immediate independent cash flow. The press release also highlighted strong capital efficiency, with recompletions estimated at up to about $250,000 per well and new vertical wells at approximately $700,000 per well. This cost structure gives BlockFuel a pathway to increasingly use its own oil revenue to fund production growth, potentially reducing the burden of future shareholder dilution. This brings us to a potential valuation disconnect in the market. On a purely industry metric basis, a producing asset scaling from around 100 to 500 barrels per day in this oil environment might support valuations in the rough range of $15 million to $30 million or more, driven largely by the high value of undeveloped reserves. Please note, this is a generalized industry estimate based on current oil prices and typical sector multiples, not official company financial guidance. However, it highlights a substantial tangible asset floor for IBG right now. While this oil production and reserve value is the primary driver today, there is a significant green upside to this story. Analysts now estimate that Big Tech will spend over $600 billion on data center and AI infrastructure capex in 2026, creating a critical power bottleneck. As a powerful secondary engine, BlockFuel can utilize associated flare gas to generate self-sustained off-grid electricity. New policy proposals like the Data Act and recent White House guidance are making it easier for AI data centers to operate on this type of compliant, self-sustained off-grid power as grids become more constrained. Because IBG now holds a controlling interest, BlockFuel can be consolidated in IBG's financial statements under standard accounting rules, meaning IBG can recognize its share of BlockFuel's oil revenue. Furthermore, public filings indicate IBG has a relatively tight capital structure with a comparatively low number of shares outstanding. As is widely recognized in financial markets, this limited public float combined with strong sector momentum can act as an accelerant to stock price volatility in either direction. Under the proven leadership of CEO Daniel Lansky, who has a history of building oil and gas production portfolios, IBG is capitalizing on hard energy assets with a built-in AI infrastructure upside. This video was prepared by JP Capital. It is for informational purposes only and is not investment advice. JP Capital has been compensated by Innovation Beverage Group Limited for investor awareness services. JP Capital and its affiliates may hold, buy, or sell securities in the company at any time, which may create a conflict of interest. Future events are subject to risks and uncertainties. Viewers must read all relevant SEC filings before considering any investment.